What if someone told you about a high conviction stock in an industry that had not yet matured and that the general public is skeptical about, and they were highly convinced based on their research that this company could potentially average 50 to 70% growth per year? Furthermore, this company's price was currently in the low hundreds, but could go up in the mid thousands within 5 years. Would you consider investing in it? Well, that someone was Cathy Wood, and that company was Tesla. Now, unless you've been living under a rock for the past few years, chances are that you've probably heard of Cathy Wood. The superstar investor and CEO of ARK Investments, she is well known for her bold prediction. Her boldest being that Tesla will be worth $1 trillion and will go up to $4,000 per share. As expected, she completely got annihilated all over the news for her prediction, especially since at the time Tesla was not showing any signs of profitability and was trading at just over $300 a share. But time has proven her right.
But wait, she said Tesla would be $4,000 a share, but it's only at $850. So she was wrong. Oh my goodness, she was off after all.
Well, actually, she made this prediction back in 2018. So if you adjust for the stock split in 2020, the price is actually closer to $4,250 a share. And if we took this calculation at the beginning of 2022, it would actually be at over $5,800 per share. But enough about Tesla for now. We can save that for another video. Today we're going to take a look at ARKK, Cathy Wood's flagship fund that has been on a bit of a rally lately, ending the week strong with almost 4% growth on Friday. And based on this recent performance, the question has to be asked: is this a good time to finally buy in and poise your portfolio for future gains? We'll take a closer look at this, but first be sure to drop a like down below as it helps out the channel and also lets me know what type of videos you guys like so I can give you more of what you want. Go on, click the button. Okay, now that we got that out of the way, let's get right into it. Now, for the benefit of those who are not aware, ARK Invest is a fund that invests in disruptive innovation, companies that usher in products and services that potentially change the way the world works as we know it. Today, the company boasts a variety of funds representing different areas of innovation, but your flagship fund, ARKK, was created in 2014. Top holdings in the funds are Tesla, Zoom, Teladoc, and Roku, with other notable companies being Spotify, Block Inc., Shopify, and Palantir. Companies that you've probably heard of if you're in the investing space. Now, if you look at the returns compared to the S&P 500, it was actually pretty comparable up until mid-2017, where it started to accelerate and distance itself from the S&P 500. And then 2018 came when Cathy Wood made her bold prediction and went heavy into Tesla, which paid off, as after a brief spike in 2019, it absolutely blasted off into the stratosphere in 2020, turning investors that bought into that fund early into millionaires and putting Cathy Wood and the ARKK ETF into the. Now, retail investors bought in, and the amount of assets under management for ARKK went up from $1.6 billion in March of 2020 to $17.7 billion by the end of 2020. But it wasn't finished. More investors poured into the fund, taking the assets under management up to $27.9 billion between December 2020 and February 2021. And then the sell-off happened. In February 2021, there was a correction on growth stocks as there was a sell-off that affected mostly technology companies. This included the high innovative companies that ARKK is invested heavily in. Now, these companies were hit the hardest. This lasted until later in 2021, when the growth stocks rebounded and increased their steady growth up until the end of the year. Except that didn't happen for ARKK. And I mean, it really didn't happen. Since February 2021 to the timing of this recording, ARKK is actually down almost 60%. And in this time, the assets under management has dropped from $27 billion all the way down to $11.3 billion. Investors have literally been pulling their money out of the stock. Year to date, the fund is down 29%. Lately though, ARKK has been a bit of a rally, no doubt in part fueled by Tesla's recent stock earnings beat and recent performance in its top holdings like Shopify. So given this turnaround, is now a good time to buy into this ETF that seems to be at a discount. One thing to consider is that ARKK invests in disruptive innovation, which means that companies that have potential to usher in technologies and processes that will change the world as we know it. And that's the thing. Until those disruptions are realized, you're buying into anticipated growth, and a lot of future growth of these stocks are priced in until these companies eventually become cash flow positive. The risk with investing in such companies is that they become extremely sensitive to market conditions, like rising yields and interest rates. Now, with the current decision by the Fed to combat inflation by raising the interest rates, investors are now rotating their money out of these high potential stocks and back into fixed income, bonds, and blue chip companies, which is bad news if you bought into a fund like ARKK back in 2020 and 2021. So where exactly do we go from here? Well, I can't answer that question for you, but what I will be doing is I will probably keep an eye on it. Even though it's down 60% since 2021, I believe the value of the fund is closer to where it should be rather than what it was in 2020. 2020 was a period of great overvaluation, not only in tech stocks, but the entire market just went bonkers in terms of valuation. I do anticipate that there will be an official news of an interest rate increase within the next 2 to 3 months, which will possibly affect the price of ARKK. I also have other investments that I'm looking into at this time, so ARKK is not my priority for my funds right now, but I will be watching the volatility of the price over the next 2 to 3 months to see if it makes sense to go in. Even though now isn't a bad time, but that would be my strategy. If you have the funds, it's up to you. What you do depends on your financial situation and your risk tolerance, so be sure to do your own research before committing to any investments. Now with that said, I'll bring this video to a close. If you enjoyed this video, please drop a like down below. I'll probably do another video on ARKK in depth, as it's definitely a fun to keep an eye on. But what do you think about ARKK? Like it? Love it? Hate it? Are you considering taking advantage of the beaten down prices? Leave a comment down below. If you made it this far, you're the real MVP. Thanks again for watching, and I'll catch you in the next video. Peace.